Welcome to the Monks Academy, an educational channel where we explore the realm of decentralized finance so you can take charge of your financial future. A project powered by the Omm Monks for the Omm Finance community.
And it's nearly time.
Yeah. So I think we'll just go ahead. Hi guys. It's been a while. Welcome to another Monks Academy session. The first session for 2022. The topic of discussion obviously is DeFi in times of volatility. I've got fellow Omm Monk Steven with me. Before I hand it over to Steven and we go discuss in depth of the focus areas, I just want to just give an overview of the prerequisites of using DeFi in times of volatility. So I've pretty much broken it down into three key things. What you need to do in times of volatility based on the experience I've had and talking to other senior DeFi enthusiasts in the space. First thing is you need to know what your risk tolerance is. You need to know how much risk you're willing to take for the return you are expected. So, for example, if you're happy with a high risk strategy, then you need to know where you draw the line. That's very, very important, because in times of volatility, capital preservation is very, very important, because when markets go down, you need to have some money. You need to have money in stables, and you need to have liquidity to kind of buy the dip, so to speak. So that's a key aspect of, you need to be aware of your risk tolerance. The second thing is, how much time do you have? If you're taking on high risk strategies, high leverage strategies, you need to be able to allocate some time. You need to have time allocated at least twice a day to look at the markets. And judging by the last few days or the times of when the markets were really dipping, maybe about a week ago, before you go to sleep, preferably you should close your positions. It's easy to say now in hindsight, but and sometimes very difficult to predict when the volatility would be. But sometimes if you're taking on high risk strategies, its rule of thumb is close the positions or reduce your risk by either putting in more liquidity, or, for example, if it's a balanced strategy, covering more of your collateral, building up your collateral a bit more, things there. But I mean, it's very difficult for a situation that has happened in the last week where it's unusual volatility. It's very difficult to predict that. But as a rule of thumb, it's important that you prepare, allocate time, and then if you don't have time allocated, you need to kind of take on passive strategies. On Icon now you have Optimus, which is a great passive strategy that you can take on if you don't have much time. You can just put it into that or close your positions and take a very risk-averse strategy. The third most important thing I feel is what level of knowledge you have. So if you're new to DeFi, go to each DeFi platform, ask yourself, do you really understand the risks before you put your assets to work? Obviously, all of you here and who will be listening into the replay of this has an understanding of Icon DeFi in general, understands that's not been hacked. There's no previous history of rug pulling or things like that. So it's a big tick there. But when you go into a bit of detail, you need to understand whatever product you're putting yourself money into. Is it a liquidity pool? Is it a different strategy? Is it a money market strategy? So you need to understand impermanent loss. You need to understand how the protocol makes money. So you need to, if you can't answer those questions, I suggest you don't take a active portfolio. If you're taking just to see how it works, you can take a small portion of your funds and put in a DeFi. But I wouldn't put more than you're willing to risk, especially early on. So Again, I would point to Optimus. I've been telling quite a few people on Icon Discord as well. If you're new to DeFi, do not put your do not take active positions in Balanced and Omm, because it's the most important thing right now is understanding what you're putting your money into and the time. So Optimus is a way to go if you're new to DeFi. So those are three main things I wanted to kind of drive home to you guys. And I just want to hand it over to Steven. So Steven we'll be basically discussing about rebalancing. We'll be talking about the power of Optimus. We'll be talking about different DeFi strategies you can take in times of volatility. And to finish it off, we will be kind of talking about just getting everyone's thoughts and things like that, and also the benefits of actually staking in Omm. So that a lot of people don't know about this, but it's a very important thing. If you're not staking in Omm, you should relook at. So, Steven, over to you.
Thank you, Rush, for the intro. So today we will be talking about the specific risks of high volatility. So rather than addressing all strategies across the different protocols, and we will be breaking it down into three segments. First, we will be talking about balanced, and also about Omm, a short segment, and the final segment will be the Optimus segment. After each segment, we will allow some time for some questions in the audience, if there are any. Just raise your hand when you do, and you will be invited to speak on stage. So let's start off with balanced. So for balanced, the main risk during high volatility is actually in liquidation. When we talk about the LP pairs on balanced, there is no liquidation risk, only impermanent loss, and not even impermanent loss in the ICX LP pool. But we will not be addressing this today. But on the borrow side, there is a risk of rebalancing and reverse rebalancing, as we have seen lately in the last event, which can contribute to liquidation. For the entire explanation on what happened during the recent liquidation event, I will not go into much detail on that, because there is a very detailed postmortem written by Scott on the Balanced forum. So I invite you to go there if you want the in-depth details about what happened and what triggered the cascade of those liquidations. But today we will be talking more about how to protect yourself and to avoid these type of things happening to you. So what you need to know is the most risky versus the least risky strategies when it comes to borrowing. So when people are borrowing BNUSD against their ICX collateral, you can have a low risk one, which is in the past people were just keeping BNUSD in their wallet without doing anything. Just they were satisfied with just mining the Baum token. Now, thanks to Omm, we can also supply it onto Omm Finance and also get interest on that BNUSD. So this is a very low risk, because this also means that you have BNUSD liquid in your wallet to pay off your debt whenever you need it, and you also have no price risk. Then the more risky strategy is taking leverage with buying more volatile assets, like, for example, using that BNUSD from your loan to buy ICX and to buy Baum. And then even more riskier is by adding the ICX on top onto your collateral, for example, because then you have also the risk of it being locked when you reach the threshold. And for Balm, for example, you can stake it, and then it's locked for 3 days. So also out of your access for immediate paying back of your loan whenever it's required to do it urgently. So those are that's the difference between a low risk and a more risky strategy. So what's important? So you will always need to have BNUSD to pay off your debt and reduce your threshold. Many people probably know, but I think some were caught off guard that when you reach your threshold, your collateral is being locked. And even though your collateral is still worth a lot more than your loan at that point, you still have no access anymore to it, and you cannot use your collateral to pay off your debt. So, and this is what got a lot of people liquidated because they didn't have any cash or other assets available that they could liquidate into BNUSD to pay off their debt. So this is a very important one to take note of. Always make sure that you have something liquid to pay off your debt whenever it's needed. Now, when you're managing manually, for meaning that you do not have the capabilities of writing your own bots to manage your position, or you're not using an aggregator like Optimus during high volatility, you might want to consider, this is also touched upon by Raj in the introduction, to close your position, because some people who understand how rebalancing works were still caught off guard by the amount of collateral that was added to their positions overnight. So while they were sleeping, a lot of ICX was added to their position. And when the price keeps dropping, even when it's added to your position at a premium, when the price keeps declining, it's still not favorable to you, and it might leave you with a financial hangover if you have to liquidate that ICX into BNUSD to pay off your debt. You might still be at, or you probably still be at a net negative. So this is, in short, what I wanted to address specifically for Balanced. So I'll just leave a short time for people to ask questions, or if not questions, maybe also share some insights yourself. So
yeah, I mean,
see whether.
Yeah, until people come on. I mean, for me, luckily, like, yeah, I'm very risk averse individual, so I did the strategy of BNUSD. Actually, before BNUSD was added as an asset on Omm, what I was doing is I was borrowing and I was just holding my BNUSD. I wasn't utilizing. I wasn't utilize the BNUSD. I was just keeping it in case I was being rebalanced or reverse rebalancing. I just had it as liquidity, and I was really glad that BNUC was added, and then we could use it on Omm to get so I can put it to use.
Yeah, indeed. I think everyone is quite happy with that addition to Omm.
Yeah,
it's good for the ecosystem as well. All right. So I haven't seen anyone requesting to speak. So we can continue to the next segment, which is the Omm segment. So what I wanted to talk about Omm, because there is, of course, Omm didn't really suffer from anything during this event, because there is no risk on liquidating. Specifically to what happened, because what we have seen was mostly on balanced for the rebalancing, but that also came to many people started discussing on what's the best thing now, Balanced or Omm, if you want to take a loan. So I wanted to touch on that as well, just to clarify the difference. So many people say that Balance is quite nice, and to take out a loan because you can do it long term. There's no fixed interest that you need to pay. You just have the origination fee, and that's it. But I think now, due to this event, people have learned that it's more than that. Just having your loan unbalanced means that you are subjecting yourself to rebalancing, and in the past. It might have not been that big of a difference, but we have now seen that it's still it's a risk. So it's a one that you need to think of when you're taking out your loan. And for short-term loans, Omm Finance might be the better one. Even if there is an interest rate, flexible interest rate applying for short-term, Omm Finance might be an interesting one instead of using Balance for doing this. So then we have the segment of Optimus. Optimus, or specifically, we will be talking about the borrow strategy again, because this applies to the rebalancing event. So Optimus will be managing your position by increasing and decreasing your loan to optimize your BAL mining safely. That's more or less what the borrow strategy on Optimus does. When specifically talking about rebalancing, Optimus will not buy back your ICX when your collateral is sold. This was communicated in before the strategy launched, because it will create a rebalancing loop. So this is something that Optimus has stated that they would not do. But of course, Optimus must manage your position to prevent liquidation. Normally, Optimus does this by selling the BNUSD it loaned, but now we have seen reverse rebalancing happen. So now the question arises: what does Optimus do with the ICX which was added to your collateral by reverse rebalancing, and thus pushes you closer to liquidation? So that's a question that I asked to the Optimus team, and I came to learn that Optimus does sell ICX added to your collateral by reverse rebalancing. So knowing this, now we want to know, when does Optimus sell this ICX? Do they do it immediately when the collateral was added to avoid any downside price risk? Or do they do it only in function of managing the liquidation threshold? I asked this question to the Optimus team, so I'll paraphrase the answer from the Optimus team, and their answer was: this event will be triggered by any deposit withdrawal activities by the users, and additionally, whenever we notice an unusually high frequency of rebalancing within a day, we will activate our own bot to monitor the rebalancing effect to the strategy. If the rebalance goes beyond our predefined threshold, for example, 2000 BNUSD, the bot will trigger deposit withdrawal immediately. So even though this doesn't give 100% complete clarity, we did learn that Optimus does have a threshold. I'm assuming they want to keep this secret, maybe because other bots might otherwise be have an advantage over that, which will manage selling ICX added to your collateral by reverse rebalancing as part of their borrow strategy management service. So are there any questions about this part, either the Omm or the Optimus part? Or maybe any comments from you, or anything you want to add to that, Roche?
No, I think it's pretty well established. Just on the point of on balanced, I guess on the rebalancing, we were talking about rebalancing point, and then I got asked this question on Omm. I think was Hyperconnect asked. He realized that there's a disparity always between the BNUSD, between the ICX price, on the DEX ICX price and the exchange ICX price. So I think a lot of people knew that but didn't realize why it was happening. So basically, that's as in part, it's mainly because due to rebalancing, because obviously it's the buying and selling, the disparity that takes place when the DEX balance has to buy and sell ICX to maintain parity between the CX, the centralized exchange price. Because don't forget the price oracle is banned, and they take the average of the exchange prices across exchanges. So a lot of people didn't realize why that was the case. So I just want to kind of uh, give reason as to why that is.
Indeed.
And the other problem, the other thing, what I wanted to say is on Optimus. I think a lot of people were kind of asking this question. I find the yields are pretty high. I think it's something like 35-40%. I didn't check at the moment, but APY. So I guess that's mainly because I guess it's still fairly new and the yields are pretty high. The other thing is the fact that, for example, the ICX liquidity pool, I guess um, they're kind of selling the ICX, and I guess like adding on to the position and getting more returns by staking and things like that. So
Yeah, on Optimus, you currently have just below 800% APR on the LP pool,
okay,
and for staking you have 277 more or less percent APR. So yeah, those are indeed still quite nice APRs, and of course it's always
sorry,
driven.
I wasn't.
Yeah, it's quite new, like you said.
Yeah.
So there are still many people that there is not so much supply either. So it's at the moment it's the highest price point of IRC token in our ecosystem, and it will always have a very low supply. So people need to consider that. But what's also interesting is for the staking of the Fin token. At the very beginning, when the platform launched, there was no fin being allocated to the stakers. So you only had the platform fees for stakers. But then a few days, I think a few days after the launch, I think it was the 19th of January, they made a change to the distribution allocation, and they added 5% of the daily distribution towards fin stakers. Of fin distribution towards fin stakers as well. And this really made the APR increase a lot because it's still new, and we only have at the moment only bound fees.
No wonder because I didn't check it. That's why the APR is jacked up, because I didn't check it today, and I was like, no wonder it would happen today, right? Today, or the change.
What do you mean?
The addition.
No, the change was made already on the 19th of January. So the APR was high as from already for 2 weeks from when they did that.
Okay.
The staking, I mean, the LP was at a certain point it was much higher than it is now.
Yeah.
That's all normal when a new one launches.
Started, yeah. I think but I guess it's in terms of strategy, it doesn't carry the same risks as the others, because I guess someone else is managing it for you, and it's
yeah. I also asked. I mentioned it. The only additional risk that first of all, you have some risks, of course. You have both. You have
liquidation risk.
Every protocol can be breached. So you have it can happen on Optimus, and it can happen on the other platform, whether it's Balanced or Omm, depending on the strategy that you have used. So of course, it's an additional layer on top. So there is always a possibility of that happening. Having a security breach on that, but and you're also trusting, of course, that the bots of the Optimus team will do a better job than you are doing manually. So they can also happen something on that end. So there are risks with everything you do. That's also something that I wanted to touch on the conclusion later on.
Yeah, I mean that's something that I also drive home about is the smart contract risk. I mean, it could be audited by the best security firm and audit firm, but it's still the risk is still there. So don't put all your assets into one particular DeFi platform. Always have some in the comfort of your own wallet.
Yeah, indeed. All right. So maybe just go on to the conclusion of today, and then we can still see whether there are any questions in the end. So as a conclusion to what we have said today, that I would like to say that the recent events have shown that many users have not been aware of all the risks and consequences of using the various DeFi platforms. And then even it's not just newer users, but also more experienced users have been caught off guard and have learned important details of the exact workings of for example, the Balance platform in this case. So we all need to be aware that that mining the various DeFi governance tokens, it's not a free money printing machine. All strategies have some form of risk, and it's best to be aware of them. So, and as stated in our intro, step back, assess your risk tolerance, learn as much as you can about each protocol before you use it. And more DeFi protocols will be launching soon on the Icon chain. And we have Equality, Karma DAO, and Convectus upon us the next few months. And BTP will give even more access to many different protocols cross chain. So be responsible. Make sure you know all the risks and how exactly they work, and stay safe. So that's.
Sorry to interrupt, but what I would really want to ask you is what kind of strategies are you kind of like, without giving too much detail, if you don't want to, like, if I was to get into see your portfolio on your screen, or in terms of your strategies, what is your most popular strategy that you're currently like doing right now?
Yeah, I'm at the moment I'm choosing to avoid the rebalancing. So I've closed my position on balance that I had for the borrow strategy that I did myself manually unbalanced. But I've moved everything that I did manually into Optimus, but not on the borrow strategy, but on the most safe one, the ICX LP. That's currently how I'm mining Fin at the moment. And yeah, on Omm, I also have a stablecoin interest. But that's more or less what I'm currently doing. I am not in any LP at the moment. So I'm playing it quite safe at the moment.
Yeah, same. Yeah, I mean, I've actually not taken up Optimus strategy yet, so need to have a look at it and uh, take advantage of it at the moment, because ever since the last dip, since I closed my positions on Balanced, I've still a small position, but then yeah, pretty much wait and see strategy for me.
Yeah.
So
yeah, and that will also create opportunities for the people that have a higher risk appetite. This event, if people become much more risk averse, then there are opportunities for the ones that aren't. So the returns for them will go up, and this will probably attract again more people. So I think the entire DeFi icon ecosystem will be fine, and we will be seeing a lot more users, I'm sure. Now, I have also here received a question from someone in the audience on my DM, asking for a bit more explanation regarding the newer platforms, Karma DAO and Convexus. So we have some time, I think. We are just we can touch on those as well. So Karma DAO is a platform, and both are, by the way, financed by the CPS, built by the same team, Protocol 7, which is also worked on Balanced and on Omm. So it's a notable team for sure. And Karma DAO is making protocols owner of their own liquidity. So yeah, I'm not going to go into too much detail, but it means that people can sell LP tokens for liquidity positions they are in, and they can sell it to the Karma. You have Karma DAO and you have Karma Bond. It will be selling it to Karma Bond, and in return for the governance tokens of those platforms. So that can be Omm, that can be Balanced, and you will be trading then more or less, or selling your trading your position in the LP to them. They will become owner of their own liquidity, and you will get a governance token Omm or Balanced at a discount. Of course, to prevent immediate arbitrage, you will have, I think it was 6 days, if I recall correctly, 6 days that they are locked from selling. So if you're interested in investing into those government tokens, this might be an interesting path to take, because on one hand you have them at a discount, and on the other hand you will be mining initially it will be called, I believe, B Karma token, and the B Karma token will give you the opportunity to buy the definitive Karma token, and then to buy the Karma token, you will have to have one BNUSD and one B Karma token. This will allow you to buy it. So they will have $1 always backing the Karma token, but Karma will be traded freely, so the value of Karma can be deemed by the market to be more valuable than $1. But there will always be $1 backing it, but it can go higher value of Karma. So I think in short, that should answer your question regarding the Karma DAO. If you have any more questions about it, just let me know, either by coming on stage, or you can continue sending me a DM. And then Convexus, this is the newest one. I still have to dig deeper into that one, but it will be a DEX. But it will be a concentrated liquidity DEX. So it's more or less comparable to what we have on Balance at the moment, but the aim is to have concentrated liquidity and have lower fees. So I don't know, Arash, whether you have read into any of those, and whether you have anything that you want to add on top on that.
Yeah.
Or maybe someone from the audience who has deeper knowledge.
Yeah, I think Donnie, I can't did a deep thing on the interview with the Kamadao, I think Hyperconnect and Robbie as well. So I think essentially on the point of Kamadao, I think it's a better solution for the DeFi protocols than what they're doing right now to gain liquidity, rather than giving them rather than giving the coins away for free and just not devaluing, but just is a suboptimal way of getting liquidity. This offers Kamada offers a better solution for the DeFi protocols. Rather than giving it away for free, they're giving it at a discount. So uh, right off the bat, it's a better solution for liquidity. It's not the best solution, but it's a better solution right now. So I think it's an important tool for the DeFi platforms. I think that's very important. So I really like to see it how it plays out, because there's been a bit of controversy with if you people are familiar with Olympus and everything what has been going on over the last week or so with those type of protocols, and also forks of Olympus also haven't been really doing too well. So this is kind of a similar concept to to Olympus. So it'll be interesting to see how protocol own liquidity plays out in times to come. So I think it's an important area.
Yeah, definitely. No, and it will also be as a governance token valuation. It will also be an interesting one to me because I don't know whether you have seen the Excel that I sometimes share on Twitter to compare the different distribution schedule of the different DeFi protocols.
Yeah.
But for Karma, it's a strange one, of course. It doesn't have a fixed distribution schedule that we can look at, and we can see how much will be in supply for the next coming years. Because it just gets minted when people trade in their LP tokens, and then several Karma in beginning tokens will become minted. So yeah, it's also interesting to me, and I think it will be very interesting to see it to see how it price wise will perform initially, because we do not really have any base benchmark to it. It's the first time that we are seeing something like this in our ecosystem.
Yeah, I think it's important. It's important place, but also I would like to see, hopefully in time to come. I mean, a good example is how successful in the short. I mean, it's still too early to say how successful Optimus is, but the early adoption, and it's easy for people to understand. The concept. They don't have to do too much. I see the trend as well. I mean, this wall type kind of DeFi protocols where people just give the protocol to manage and earn returns, and especially in a bear market as well. These strategies have a lot of use cases, and I see an important trend on Ethereum and all. Like the hot areas is now options. There are some option walls, on Ethereum and things like that. Ribbon Finance is a good example where you can get. Currently I'm in that. I've been using that pool for May June, and I've been getting returns. My APY is about 20%, and 20%. This is Ethereum return in Ethereum terms. So it's pretty good. And this is, and we've had from May we've had bull market. We've had crazy up in prices coming down, and even then there was only once that it was out of the money. I don't want to go into too much data, but it has been maintaining average of 20% in Ethereum terms, so which is very good. So I would like to see more of those kind of products coming to the Icon ecosystem. I think there's a big market for that, because there's not much that the user has to do. So the protocol does all the work for you and gives you a return at the end of the day. So I think for adoption wise, I think that's something that we need to look at for the icon ecosystem.
Yeah, definitely.
So yeah, if there's any other questions, guys. Uh, yeah, I think we're good. Next week, we'll pretty much be like, if there's any, if you have any suggestions or any topics that or anyone you want to bring in or anything that we want to keep this as Omm focused as possible, or at least how the Omm users can take advantage of things. So uh, do drop a message on the Omm forum. There's a there's a forum I've opened up in terms of any suggestions and things that uh, in terms of topics to cover. So just get interactive, just drop a message, and this is for you. We want to keep it as informal as possible, but also informative as possible. So let me know, guys, and hope you enjoyed this session. And thank you very much, Stephen, for your insights.
No worries.
All right, take care, guys.
Take care.